In this presentation, we will continue on analyzing the major forms within the customers section, this time taking a look at the sales receipt within QuickBooks Online. Here we are in QuickBooks Online with the free version of the Craig's Design and Landscaping, which you can find by Google searching or browser searching QuickBooks Online Test Drive. We're now going to be going to the desktop version to consider the flowchart. So we're now looking at the flowchart. Last time we entered the information all the way through the flow from the invoice to the received payments to the record deposit. That would be a situation where the payment, the work was done before we got a payment. We invoiced them, and then got the payment in the mail, we're imagining. Now we're going to say, okay, cut those 2 points off, and let's say we just have a restaurant or something like that where we do the work and then we get paid at the same point in time. You can think of that kind of like a register now. You have a register where you have more of a sales receipt as opposed to an invoice that you'd be sending out to get payment later. So this would be more of a cash basis just because you could use accrual or cash, but it just so happens that two things happen at the same time, and therefore either method you use will be the same. You'll have basically, you're going to get cash and record sale at the same point in time. So for that, we're going to be using the create sales receipt. Now the create sales receipt is similar to the invoice, except that the invoice records something to accounts receivable. So when you hear invoice, you say, okay, that's the AR, accounts receivables going up, as opposed to the sales receipt when you're going to be increasing undeposited funds. You're actually getting the money. You're getting a check, you're getting the credit card, you're getting the actual cash at that point in time. Now, typically, if you're getting cash or a check, then we put it into the undeposited fund account. We then go to the bank at the end of the day and still record the deposit. So if you have the create sales receipt or the receive payment, those are the two things that would be feeding into undeposited funds, which you would then group together at the end of the day and go to the bank and then record it in as a deposit. So let's take a look at what the create sales receipt would look like if we were to go to QuickBooks Online. So we're going to be over here in QuickBooks Online. I'm going to open up our financial statements once again. We're going to practice that, opening up our financial statements. We're going to go to the reports down below. We're then going to be creating or opening up our profit and loss report. Let's change the dates up top. Be working in 2020. So let's go to 01/01/20 to 12/31/20. And then we're going to go ahead and run that report. And then we're going to scroll up top, or I'm going to go up top. And then I'm going to right click on the tab, and duplicate that tab. There we have it. Let's do the same for the balance sheet now. So I'm going to go back to the first tab, going to scroll down to our reports, and then we're going to take a look at that second report, that being the balance sheet. So let's open up the balance sheet. Let's change the dates up top. Going to scroll back up top and change the dates from 01/01/20 to 12/31/20, January through December 2020. Then we're going to go ahead and run that report. Then I'm going to go back up top and I'm going to duplicate that tab. I'm going to right click on it and duplicate that tab. Now we have our balance sheet and our profit and loss. That's going to be a typical routine. I would typically have those things open almost all the time when I'm basically doing anything, because we're going to always be jumping back to those reports. Now we're going to go to the dashboard. I'm going to go back up to the dashboard and we're going to create a sales receipt. I'm going to go to the plus button up top and we're in the customer section, and this time we're going right to the sales receipt. And this is the one that you can really think of if you're thinking about someone that's working within a store or working at the restaurant or working at the food truck. This is the one that you'd typically be using as you record the payment. And you want this to be set up as easily as possible, so you could just have someone basically collecting the money in that kind of situation. So we've got the sales receipt item here. And if we go back up top, here's the sales receipt. I'm going to go through process that we did when we had the invoice. So it's going to be very similar to the invoice. We have the customer up top, so I'm going to choose the customer. I'm going to choose the same customer, Amy, again, and so we'll pick the same customer. We can compare and contrast then the invoice and the sales receipt. Now, first of all, note that we would need to enter the customer information. Notice it populates for us. We can create the customer as we make the sales receipt, or we could set it up beforehand. So if you're thinking about something where you're in basically a restaurant and you're entering the data, you may not need a whole lot more data from the customer. You may not need their address and contact information and email and so on and so forth if you're in a restaurant or something like that. But if you have larger ticket items like a guitar or something like that, then you would like to pick up that information so you can send them your newsletter and whatnot like that, things like that. So you want to be able to set that up. So we want to be able to set that up kind of on the fly as we're making the sales receipt. We'll talk about how to do that more later, and possibly set that up, if possible, have our customers already in place to make the data input process even easier. I'm going to pick the date. I'm going to say this is going to be on the 12th. We're going to say the payment method could be credit cards, cash, check, and so on. I'm going to pick the cash at this point, and then it's going to be going into undeposited funds. So we're going to be increasing undeposited funds. We got cash. You imagine it going into the register, and then we're going to deposit it at the end of the day, grouping the deposits together, putting it into the bank account at that grouped amount. We're then going to pick a item. This is just like the invoice, the most complex part. We'd like to be able to pick an item and let it populate by itself, basically. Let's pick that pump once again. So if we pick the pump, and I'm going to say that we have 2 of them this time. I'm going to say they're at 1,000. I'm going to change the amount. So now we got the 2 pumps at 1,000. Last time we had the 1 pump with the invoice for 1,000. So we have similar information down below where we have the 2,000 being calculated, the sales tax at the 160 for the 2,160. What's this going to do then to our financial statements? It's going to be increasing the cash account, which is the undeposited funds, rather than the checking account. And then it's going to be increasing the sales, increasing sales for the 2,000, however, not the full amount we will receive, 2,160. The difference of the 160 will then be going to the liability account that we have to then pay for sales tax payable. Then, since we're dealing with inventory in this case, which may not always be the case, in this case we are, therefore the inventory will be going down by some amount that's not actually on the sales receipt, because we don't want to give that amount to the client, but it is being driven by the sales receipt by the items that we have set up. So that's going to be an important key part to this, to making this work easy. And then the other side is going to be going to cost of goods sold for that. So all that is happening with the sales receipt. But notice how easy it is to populate the sales receipt once all that is set up. Once, in essence, these items are set up properly, we should be able to have anybody be able to set up the sales receipt. And if you ask somebody, well, what does this item do? They don't really need to know that, right? They're just going to input the item and ask for the amount of money that shows up at the bottom, right? And if you were to ask them, well, what's going to happen to the financial statement when you record this? And we talked about like 5 different accounts that are going to be affected. They'll have no idea. They're going to say the cash is going to go up in some way, right? And that's fine. That's all you need. That's what you want the data input process to be. But to do that, you got to know what the items are to set up the data input process as easily as possible. And then it's best to be able to analyze your reports to know what the effect of something like the sales receipt is going to have on the financial statements. So I'm going to go ahead and save and close this, and let's see if we can check out what does happen on the financial statements. Then we're going to go over to the balance sheet. Let's take a look at the balance sheet and make this a little bit larger. It went into the undeposited funds directly now. So if I go up top to the balance sheet and I scroll down to the undeposited funds and I select the undeposited funds, now we're kind of going backwards, drilling backwards. Here's on 112, that sales receipt for Amy again. And we have that amount of the 2,160, the full amount. If we select that item, we will then go into the actual sales receipt for the full amount of the 1,060 on the right. So the 2,160. The other side is going to go to revenue. So I'm going to close this out, or sales. I'm going to go to the left, scroll up, and then I'm going to go back to our reports. Then we're going to go to the profit and loss. If I go to the profit and loss report, we're going to be in the sales item up top. So we had a sales item. So it actually got reported to the sale of product income. So sale of product income, that 3,000, which includes the sales receipt. There's the sales receipt. So if we go to the right, there's the 2,000 included in this sales receipt. So note that 2,000 isn't the full amount that we received, but only our amount. It's not including the sales tax of the 160. So where's that 160 sales tax? If I close this back out, and then I'm going to go back to our report up top. We're going to go back to the report up top, and then I'm going to go back to the balance sheet up top. We're going to go into the liabilities, and we see the Board of Equalization. That's where the sales tax went. We go to that item. We say go to the right. There's the sales tax of the 160. We're going to owe that later. So, and then we'll talk more about this when we go through the actual problem, and we'll see how this connects together and how to pay the sales tax. Then we'll go back up top. We'll go back to the reports. Then if we sold inventory, inventory would be going down. So that's going to be an asset up top. Asset would be going down if we're tracking it in QuickBooks. There's the inventory, selecting the inventory item. The last amount is that 112. If we scroll to the right, there's the $20 of the inventory going down. $20, it's a low amount because we changed the sales price. But note, it's not on here at all. There's no $20. Where did they get that $20? It got it because this item's driving that, even though it's not showing up on the sales receipt. So we'll talk about items. Items are going to be very important to set up the sales receipt right. We'll talk about them in future presentations. Closing this back out. And we're going to go back to our report. Then let's going to go to the profit and loss report. And we're going to say that we have the cost of goods sold. Cost of goods sold is going to be this $30. That's the other side of the inventory going down. This is the expense. There it is, the $20 expense for the cost of goods sold of the inventory we sold in order to help us to generate that revenue. So I'm going to close this back out and go to the right and scroll back up. Now, and let's go back to the report. Now I'm going to go back to the desktop version. And note, just for the flowchart, we've entered the sales receipt. Now the next step would be to go to the deposit, just like we had done with the received payment. So we're basically, you'll note, obviously at this point in time, which would be the same as these two steps or this one step, and then we're going to go to the record deposit. So if you were then to go back over to QuickBooks and you went to the plus button and you went to bank deposit, then you would see the deposit that we just set up here. There's your deposit. And then we can record that deposit in a similar fashion. We could group it to other deposits as well, and then save and close that deposit. And typically we would do that, like I say, at the end of the day, hopefully, grouping all of our deposits together and putting them into the bank account in the same format as they will appear on the bank statement.